Welcome back to a new video, guys. Today we will have a look at BTC. We will take a look at the wave count so far, and then we will check this consolidation over here, what Elliott wave structures are possible here. We will have a look at the running flat, at the expanded flat. So the two most probable options we have here. We could also be in a sort of a triangle, but the flat corrections would make more sense to me. We will then have a look at a few tweets from Credible Crypto and Techdev. Both think that we have already achieved a bottom, so we will have a look at why they think that, have a look at some tweets of them and check what their reasoning is, and then also discuss my opinion of a further drop before we head back up. So yeah, we will discuss all options and just take a look at the possibilities. So because charts are always only probabilities and never certainties, so you have quite reasonable points to both sides. There is not really something right now where you can say, okay, the bottom is 100% in or 100% not in yet. You have some indications, some indicators too, where you can look at past data and then make assumptions what is likely to happen, what can happen, what levels are important to overcome, or breaking certain levels, what it means next. So that is pretty much what we will look at here, and we will simply start from over here. So we had a low of $3,120 back in 2018. That was our bear market bottom, and then we started our move for the wave 1. So we had a move here. This was a wave 1, the wave 2, 3, 4 and 5. So we had 5 waves here in this range. So that was the wave 1. A wave 2 is usually very deep, and it raises most profits from that wave 1. So as we can see, we started here at 3,120, rose up to 14k plus minus, and then had an ABC correction here, which ultimately dropped to 4,210. So it erased an enormous amount of profits which you would have made during this move up, which is very usual for a wave 2. Another characteristic is that if a wave 2 is this deep, then usually you have a wave 4 that is in a flat correction. That is also why we now debate about the running flat or the expanded flat being two options of this consolidation over here. Another option would be a triangle where you have an A, B, C, D, E, and then the next move. But we will skip that triangle option for this video because it would otherwise just get too big. So let's get into the obvious first, and then we will get over to the tweets and look at the wave 4 we are currently in. So from here to here you have a wave 1, then to here you have a wave 2, then this move to here was a wave 3, and that is where the wave 4 started. Some people say that this right here was the wave 4 and this over here then the wave 5, but that makes not really sense, and I will tell you in a second why. So I will just place the 4 here now and the 5 here, just, but they don't mean anything yet. We'll have a look at those two a bit later. So why doesn't it make sense that this right here was a wave 4 and this is a wave 5? Well, for that we will have first a look at the fib levels. So if we take the fibs from 1 second, I have to reverse that. So from here to here, so we start with the 0 fib here and the 1 fib is here. A wave 5 usually goes at least to the 1.272 level up to here, the 1.618. That is the most reasonable target range for wave 5. This wave 5 is very, very short. That is the first thing that makes you think, yeah, okay, maybe this was not a wave 4 yet, a wave 5, sorry, because it is just a little small. And also if you compare this wave 1 and the wave 3 in size with this over here, it makes very little sense that this would have been a wave 5. I will show you a little graph. So this right here is the usual bull market, how it behaves. So you have 5 waves for wave 1, then ABC correction for wave 2, another 5 waves for wave 3, ABC correction for wave 4, and another 5 for your wave 5. And it just doesn't make much sense that this is how do I say that it is this small in size. Another thing you have in Elliott wave is that waves are usually not quite the same length, but comparable, let's say it like that. So the wave 2 took 37 weeks, and now if you drag this over here, so from the wave 3 top to here, you see, okay, this is still fine, but it doesn't make sense that a wave 4 completes in 10 weeks when the wave 2 took 37 weeks. That is just too small to be a completed wave 4. So now that we covered this, we will head over and check the wave 4 possibilities. So let's check the tweets. Let's just start with this. So Credible Crypto wrote on 8 April that you shouldn't be bear here, and quoted the real plan C. So the real plan C has posted a chart with some sort of indicator, which is the z-score, and every time the z-score touched into this area, this blue area here, you had quite significant rises afterwards. So like here, over here, or if we check this, This was about here. So there you had still a dip, and then it ranged a while before going up. That's something we also have to keep in mind. Well, we'll come back to that a little bit later. Here again, that was pretty much... Okay, wait. If we check this... Go up... Okay. Well, we can discuss about this indicator. But usually a short time after you have some rise, which I would support. Also in the current move here, which would not invalidate a move to 25k and then the move up. So that is still possible. So let's have a look at Techdev. He stated that the periods between dormancy flow, exiting the green zone, and the 3-week bullish vortex cross have offered some of the best buy opportunities for Bitcoin over the last 10 years. So if we check this chart again, he has some indications that lead to favor a bullish scenario from here, and which would tell that a bottom is actually in already. And then we move over to here. So here you have credible crypto again, which says that if we lose this level over here, the blue box, then he would consider another count on BTC and consider that the bottom is not in yet, as far as I understand this tweet. So let's go on. Okay, let's check this out too. So over here, Techdev has compared this structure to this structure here, which we can see is that you had a top followed by a correction, followed by another high before dropping and then resuming the bull trend. So that's pretty much this top here. You had correction, a higher top, and then a drop again. The difference between this here and this one here is though that this structure took out the previous low and took the liquidity sitting below this level, which we did not do yet on BTC. And that's also something I will explain shortly, that would favor kind of the expanded flat. We'll have a look at that in a second. And then we will also look at this. So this is pretty much what I talked about for the wave count: wave 1, 2, 3, ongoing wave 4, and then a wave 5. So let's head back to, let's still have a look at this. So this is one of our options where we have a running flat. So keep this in mind for a bit. We will go over to here now and have a look at only this correction over here for now. So what we have there is a pretty clear, I will just label it ABC to keep it simple. We could go a bit deeper into this, but that would be more confusing than useful. So this would be the A wave, a higher B wave, and then the running flat would have stopped here as a C wave, and then you start to get bullish again. So that is the option where the bottom is in and we start to rise to new highs from here. If we pull up the fibs, and all the way around, one moment please. So from here to down here, we can see that the B overshot, so exactly like it does in this flat running flat correction, where the B is higher than the origin of the A wave and the C wave does not go beyond the low of the A wave. So it would fit at this moment, like you can see. The problem with this is that we cannot be really sure about this until like, what was it, 56, 57k, something like that. So let's delete this and have a look at the expanded flat. So like you can see here, the A and the B wave are exactly like on the running flat. The difference is that the C wave goes beyond the lows of the A wave. So a little deeper than the A wave was. So if we now look again at this right here, we'll draw it again. You have your A wave to here, your B wave to here, and then the C wave would make sense to touch from here to here. That is usually the target range for a C, so from 1.272 to the 1.618. Let's just place it here, and then we will go over why this is my favorable count. So if we now look at what we had over here, so the difference between the running flat and the expanded flat, we had a few pumps. So we had one here, we dropped, we had one here, dropped, had one again. But all these pumps were only bearish retests so far. And what I could see is something like this. One second, I need to find, is it here? The path, yeah. So, from here to here, then to here, and then ultimately we could even touch this level over here as a retest and to fill this little gap we have over here before correcting to here and filling this gap over here. So if we do this move, that is to grab liquidity from the people that are shorting, because they don't really expect it to go that high. And if we go into this region here, so let's say about 50 to 56k, a lot of people will get extremely bullish, but we have not yet overcome the main resistances. And that is, so the region there at 56 to 58 something, yeah, 58 is very crucial. So what we have in a market structure like here, you always go for the liquidity. So you want to grab as much liquidity as you can to then push the price higher. And a lot of liquidity is sitting here below the 28.8k level, because all the people that entered after June last year could have placed their stops at that level or close below that level and would have been safe all the way until now. And a move below this level here would trigger their stops and therefore give liquidity to the market makers. Also, this gap over here is quite interesting because it fits with the target range of the expanded flat. We know that gaps don't always have to fill, but they tend to do so. Like this gap over here never filled, but that can happen. This one over here would make sense structure wise though. Sorry. So we have, to me, this right here would make most sense to simply grab the liquidity over here from those that are shorting, and then grab the liquidity over here from the people that are still long in this market, to then resume the uptrend from about these levels here. So I would expect 20 to 25k as a bottom, and then start wave 5 up. So if we assume that the bottom will be at about 22, let's take this level here and go to the top we had here. So let's delete this for a second. So let's draw this to here. Okay, so it will not be very precise now, but it kind of shows the general idea of this. So if we touch this level here, we can expect the move to be something like this. So let's just have it like that, and then let's say bottom around here, and then we start the wave 5. The wave 5 then usually goes to the 1.272 up to the 1.618. So that would be kind of what I would expect from that final 5th wave. And if we compare this move over here, so the wave 1 and the wave 3 in size, this right here as a wave 5 would perfectly make sense. So let's check like this to here, and then we can take it over here and see. Well, it would, if it is equal in size of the wave 1, we touch about 100k. And that is nothing unusual for a wave 5. It could be bigger. This would be a little too big in my opinion. That would put us to 300k. That is not very reasonable in my opinion. So this level here would make most sense to me. So about 90,000 to like 150k, about that. So yeah, I hope you liked it, and see you in the next one.